Most crypto investors make decisions based on price charts, social media hype, and gut feelings. But professional institutional investors use a completely different approach called fundamental analysis, a systematic methodology for evaluating crypto projects based on their underlying value, technology, team, market potential, and competitive position. In this comprehensive masterclass, I'll teach you the exact framework that hedge funds and venture capital firms use to identify promising projects before they become obvious to the general public. Fundamental analysis in cryptocurrency involves evaluating a project's intrinsic value by examining the underlying factors that could affect its long term success. Unlike technical analysis, which focuses on price movements and patterns, fundamental analysis looks at the why behind potential price movements. The core philosophy. Professional investors understand that while markets can be irrational in the short term, prices eventually reflect underlying value over longer periods. Fundamental analysis helps identify projects that are undervalued relative to their potential or overvalued relative to their actual utility. Fundamental versus technical analysis. Technical analysis asks, what is the price likely to do based on historical patterns? Fundamental analysis asks, what should this project be worth based on its underlying value? Both approaches have merit, but fundamental analysis is essential for long term investment decisions and understanding the why behind price movements. The institutional advantage. Professional investment firms spend hundreds of hours researching each potential investment. They have teams of analysts, direct access to project founders, and systematic evaluation frameworks. While retail investors can't match these resources exactly, we can adopt similar methodologies. I've developed a systematic approach to crypto fundamental analysis using the team's framework. This covers the five critical areas that determine a project's long term success potential. T. Technology and innovation, technical architecture and scalability, consensus mechanisms and security, innovation and competitive advantages. Development activity and code quality, E. Economics and tokenomics. Token supply, dynamics and distribution, utility and demand drivers. Fee structures and value accrual, inflation or deflation mechanisms. A. Adoption and usage, current user metrics and growth trends, developer ecosystem and network effects, partnership and integration progress, real world utility and use cases. M. Management and team founder and team backgrounds, track record and experience, governance structure and decision making, communication and transparency. S. Sector and competition, market size and growth potential, competitive landscape analysis, regulatory environment assessment, timing, and market cycle considerations. This framework ensures comprehensive evaluation while preventing the common mistake of falling in love with one impressive aspect while ignoring critical weaknesses. The technology foundation determines whether a crypto project can deliver on its promises and scale effectively. Here's how to evaluate technical fundamentals. Consensus mechanism. Evaluation. Different consensus mechanisms have trade offs between security, scalability, and decentralization. Proof of work, maximum security, limited scalability. Proof of stake, better scalability, different security assumptions. Alternative mechanisms, each with specific benefits and risks. Research the technical trade offs and whether the chosen approach aligns with the project's goals. Scalability assessment. Examine current transaction throughput and scaling solutions. Transactions per second in current state. Scaling roadmap and proposed solutions. Layer 2 integration plans or native scaling approaches. Real world stress testing results, innovation and differentiation. Identify what makes this project technically unique. Novel approaches to existing problems. First mover advantages in new sectors. Technical moats that create competitive advantages. Patents or proprietary technologies. Development activity analysis. Use tools like GitHub to assess development health. Frequency and quality of code commits, number of active developers, issue resolution, speed and quality, technical documentation completeness, security and audit. History. Review the project's approach to security, smart contract audit, results from reputable firms, bug bounty programs and vulnerability disclosure, historical security incidents and responses, decentralization of validator node networks. Tokenomics. The economics of how tokens function within a project often determines long term value accrual more than technology alone. Supply dynamics analysis. Understanding token supply is crucial for valuation. Total supply, fixed versus inflationary models. Circulating supply, what percentage is currently tradable. Release schedule. How and when will remaining tokens enter circulation? Burn mechanisms. Are there deflationary pressures built in utility and demand drivers? Analyze what creates demand for the token. Transaction fees. Does network usage require token burning? Staking rewards. Are tokens locked up for network security? Governance rights. Do holders have meaningful decision making power? Access rights. Is the token required to use certain features? Value. Accrual mechanisms. Examine how network growth translates to token value. Fee capture. Does increased usage generate fees for token holders? Network effects. Does adoption make the token more valuable? Scarcity mechanisms. Are there built in reasons for supply to become scarce? Revenue sharing. Do tokens represent claims on protocol revenue? Distribution and concentration. Analyze who controls the token supply. Founder and team allocations with vesting schedules, venture capital and private investor holdings. Community and public sale distributions. Treasury and ecosystem development funds. Comparative valuation, compare tokenomics to similar successful projects. Market cap to revenue ratios for similar protocols, token velocity and holding incentives, inflation rates compared to network growth, historical performance of similar economic models. Technology and economics mean nothing without real world adoption. Here's how to assess actual usage and growth potential. On-chain metrics analysis. Use blockchain explorers and analytics platforms to examine daily and monthly active users, SHAS addresses, transaction volume and frequency trends, network fee generation and sustainability, token holder distribution and concentration changes. Developer ecosystem health. A thriving developer community indicates long-term potential. Number of applications building on the platform. Developer documentation, quality and completeness, hackathon participation and project submissions, third-party integrations and partnerships, network effects and composability. Assess whether the project benefits from network effects. Does increased usage make the network more valuable for everyone? Are other projects building complementary services? Is there evidence of organic ecosystem growth? Are users and developers choosing to build on this platform over alternatives? Real-world utility assessment. Examine actual use cases beyond speculation. What problems does this project solve for real users? Are people using it for intended purposes or just trading? How does usage correlate with price movements? Are there measurable improvements in efficiency or cost for users? Partnership and integration analysis. Strategic partnerships can accelerate adoption, quality and relevance of announced partnerships. Evidence of actual integration and collaboration, partnerships with traditional businesses or institutions. Cross-chain integrations and interoperability efforts. The team behind a crypto project often determines its success more than any other factor. Here's how to evaluate leadership and governance. Founder and core team assessment. Research the backgrounds and track records of key personnel. Previous startup or crypto project experience. Relevant technical or business expertise for this sector. Educational backgrounds and professional achievements. Public presence and communication skills. Governance structure analysis. Understand how decisions are made. Is governance truly decentralized or controlled by founders? What is the process for protocol upgrades and changes? How are conflicts resolved and decisions implemented? Are there checks and balances to prevent misuse of power? Transparency and communication. Evaluate how the team communicates with stakeholders, regular development updates and progress reports, honest discussion of challenges and setbacks, accessibility of team members to community questions, quality and frequency of technical documentation, advisory and investor quality. Examine who is backing and advising the project, reputation and track record of investors, relevant expertise of advisors in the specific sector, level of ongoing involvement versus passive investment, alignment of investor interests with long term success, red flags in team evaluation. Watch out for concerning patterns, anonymous teams with no verifiable backgrounds, history of failed projects without lessons learned, lack of relevant experience for the proposed solution, poor communication or defensive responses to questions. Understanding the broader market context helps assess both opportunity and risk for any crypto project. Total addressable market, TAM, analysis. Estimate the potential market size. How large is the problem this project aims to solve? What is the current market size for similar solutions? What percentage of the market could realistically be captured? How is this market expected to grow over time? Competitive landscape mapping. Identify and analyze direct and indirect competitors. Who else is solving similar problems? What are the relative strengths and weaknesses of each approach? Are there first mover advantages or network effects? How differentiated is this project's approach? Regulatory environment assessment. Consider regulatory risks and opportunities. What is the current regulatory status in key jurisdictions? How might future regulations affect this project specifically? Is the team proactively engaging with regulators? Are there compliance frameworks being followed? Market timing and cycle considerations. Evaluate whether the timing is right for this solution. Is the market ready for this innovation? Where are we in the broader crypto market cycle? Are there macro trends supporting this sector? Is this project ahead of its time or perfectly positioned? Competitive advantages and moats. Identify sustainable competitive advantages, network effects that strengthen with adoption, technical innovations that are difficult to replicate, strategic partnerships that create barriers to entry, brand recognition, and community loyalty. After completing your fundamental analysis, you need frameworks for making investment decisions and determining appropriate position sizes. Scoring and weighting. Framework. Create a systematic approach to evaluation. Score each team's category on a consistent scale 1, 10. Weight categories based on their importance for this specific project type. Compare total scores across different investment opportunities. Track your scoring accuracy over time to improve the framework risk adjusted position. Sizing. Not all opportunities should receive equal allocation. Higher conviction ideas based on fundamental strength get larger positions. Earlier stage projects with higher uncertainty get smaller positions. Consider correlation risk with other holdings. Factor in your personal risk tolerance and investment timeline. Ongoing monitoring and adjustment. Fundamental analysis isn't a one time activity. Set up systems to monitor key metrics over time. Reassess your thesis quarterly or when major changes occur. Be prepared to adjust position sizes based on evolving fundamentals. Maintain detailed notes on your reasoning for future reference. Common fundamental analysis. Mistakes. Learn from typical errors in crypto fundamental analysis. Falling in love with technology while ignoring economics. Overweighting team reputation without considering execution ability. Ignoring competitive threats and market timing. Making binary decisions rather than position sizing based on conviction. Professional fundamental analysis requires the right tools and information sources. Here are the essential resources: on chain analytics platforms, Glassnode, Messari, and Dune Analytics for comprehensive metrics, Etherscan and other block explorers for transaction analysis, DeFi Pulse and similar platforms for protocol specific data, Token Terminal for financial metrics and protocol revenue, research and information sources, project white papers and technical documentation, GitHub repositories for development activity analysis, official blogs, Twitter accounts, and Discord communities. Third-party research from firms like Messari, Coin Bureau, and Delphi digital valuation and comparison tools, CoinGecko and CoinMarketCap for basic metrics and comparisons, spreadsheet templates for building custom valuation models, portfolio tracking tools for monitoring your research thesis performance, news aggregators for staying updated on relevant developments. Building your research process. Create standardized templates for each project evaluation. Maintain a database of your research and investment decisions. Set up alerts for important metrics and news for your holdings. Establish regular review cycles to reassess your investment thesis. Mastering crypto fundamental analysis takes time and practice, but it's the foundation for making informed long term investment decisions in this rapidly evolving space. Here's how to start implementing what you've learned. First, subscribe to this channel for more in depth educational content on cryptocurrency analysis, portfolio management, and institutional investment strategies. Second, choose one crypto project you're curious about and work through the complete team's analysis. This hands on practice will help solidify the concepts and reveal areas where you need additional research skills. Finally, share in the comments which aspect of fundamental analysis you find most challenging. Whether it's understanding tokenomics, evaluating teams, or assessing competitive landscapes, I'll provide specific guidance to help you improve. Remember, fundamental analysis isn't about finding guaranteed winners. It's about making more informed decisions with better risk adjusted returns over time. The goal is to increase your probability of success through systematic research and analysis.